Again, good morning, actually good afternoon to everyone who has joined us this afternoon for the Owning It Fifth Third Bank Homeownership Workshop. You're definitely in the right place this morning, and we're going to spend some time walking and helping you through your home ownership journey. I am going to ask if you could mute your lines as we get started here so that we can have full attention to what we're going to share, because we're going to share an awful lot of great information today that I think you'll be excited about this process of beginning your journey on home ownership. Home ownership is for many, this is new, but we've got the right people assembled today that I think you will be very pleased with and excited about the opportunity to really start this whole process of becoming a homeowner. If you're anything like I was, the first time I went through the home ownership process, I was nervous, wasn't quite sure what I need to do, but now here I am. I'm working for a bank. I'm Senior Vice President, Community Economic Development Market Manager for the state of Ohio. And I'm very focused on the idea of how can we create winning opportunities for people like yourselves who've chosen to join us today, who've chosen this path along home ownership, and to build equity for yourselves. So as we talk and as we walk through this is not just a one-way conversation. We're going to give you opportunities to talk back to us. You're going to give you opportunities we're going to have question and answer periods where you might be able to just share the questions that you may have about this process, what you need to do, how it works. And so we'll spend this hour and a half today, walking you through the process. Now, granted, this is just the start, but what you're going to find here today is going to be a lot of detail. So we've got some folks here who are going to give you some action steps of what you need to be the best prepared for this process. So again, take the opportunity to enjoy this beginning of your journey toward home ownership, and recognize too that we're here for you. We're here to help you through this process, and we want you to do extremely well. So again, welcome to the Home Ownership Workshop, Owning It. Our next presenter, if you can take it from here, Melissa.
Thank you so much, Royce. Again, everyone, good afternoon and welcome. As Royce mentioned, as I sat here in my home, I started to reflect on purchasing this home almost 17 years ago. For those of you who are in our Columbus, Ohio community, I am a proud resident of Berwick. And so I know and understand the importance of home ownership and how that helps us to build wealth. We are so excited to have you here today to really provide you with tips and tools on helping you to move closer to home ownership. We know that home ownership is a key component for financial empowerment and also in building wealth. And so again, we're excited to have you here today to help you to realize that dream of home ownership. I hope you find this workshop very informative. Thank you and enjoy. With that, I'll turn it over to you, Maria.
Thank you, Melissa, and welcome everybody. We are so excited and we want you to have a great experience. This Zoom process has been daunting since March, so we want to give you a few tips so that you get the best experience out of this. The first thing we want you to remember is to please mute all your devices, whether you're on a phone or a tablet or a laptop. We need you to mute your phone. Just as I just said, we have someone who doesn't have their phone muted, so we're asking everyone to please mute your phone. Thank you so much. And then this will help to eliminate any distractions or background noises. That was a perfect segue. Thank you so much for that demonstration. And then we want you to go to a quiet place so that can eliminate any other distractions around you so that you really are purposeful about gleaning all the information that's presented. We want you to get everything you need for this journey. Then we want you to take good notes. We also understand that you may not be able to take notes, so take a picture of your screen with your phone or whatever your device is, because you probably want to refer back to some of the information today. You may not be able to get it all. Then we also want you to ask questions. Ask questions, ask questions. Please use the chat function on your devices. And we want you to remind you, and Roy said it earlier, we've all been through this. There are no silly questions. We had questions too. So ask questions, use the chat function. We will interject questions in between each presenter, but we'll answer the bulk of the questions at the end of this session. And finally, we want you to know that we are going to have a drawing. There'll be 4 lucky winners one from each region who will receive a $25 gift card. So I thank you for joining us. Oh, I want to also tell you that after this session, you will receive a couple of emails from us to follow up, to talk with you and remind you of some things. So the first email should come within 2 or 3 days, and the second within 30. We want to encourage you along the way in your homeownership journey. So without any further from me, I want us to get started with our first presenter, who is a senior vice president in charge of the residential sales group, Todd Donnelly, out of Cleveland, Ohio. Enjoy, everybody.
Thank you so much, Maria. Hope you're doing well today. Good afternoon, everybody. Hope everybody is off to a great Saturday morning and enjoying what looks like here in the great city of Cleveland, a very nice sunny day. So hopefully we've got sunshine all over the state of Ohio today. So as Maria said, I'm Todd Donnelly. I run the residential group mortgage loan officers here in the state of Ohio. And it's really a pleasure to be with all of you guys today to give you a little bit of information about what, quite frankly, would be for most on this call, if not maybe even all on this call, something that might be the biggest purchase that you will make in your lifetime. And when we talk about something that is the biggest purchase of a lifetime, we really want to make sure that we are prepared and that we feel really good about the direction that we're headed when we take that big step into homeownership. So if we could go to the next slide, please. We're going to talk today a little bit about the top 10 reasons to become a homeowner. You think about all of the things that go into purchasing a home, and there's a lot of factors. You're going to hear a lot of information today from some great partners that we'll be presenting today, talking about ways to go about preparing yourself from a budget perspective, from a credit perspective, from a down payment perspective. We're going to talk a lot about all of that today. But we thought we'd just started off with a top 10, just to sort of level set with everybody. Sort of, if I'm sitting here with a family and I'm currently renting a home, the first question you have to ask yourself is why? Why am I ready to take that big step into no longer renting, but looking to buy a home? So we thought we'd give you top 10 reasons. So if we can go to the next slide, we'll kick off with our top 10 reasons. So first off, let's talk a little bit about security. Once you own your own home, there's something to be said about just feeling secure, being within the 4 walls of your own home, for your family, for yourself, as you grow a family, having that sense of security that's built around your home and knowing that you are the owner of that home goes a very long way. I mean, there's nothing better from coming home after a day of work or having friends come over to your home, just coming home. There's a sense of security connected to knowing when I pull in my driveway in the morning, in the evening, after work, that when I walk into my door, it's a home that's mine, and I feel secure in my home. Secondly, investment. Here's the cool thing about buying a home is that in many cases, values of homes over time increase. And so when you think about making an investment, let's compare it to buying a car. You know, and I'm sure many of you have heard the old adage about buying a new car. If you buy a new car and you take it off the lot, it loses its value as soon as it hits the street, right? Well, the great thing about a house is that if you maintain the home, if you upkeep the home, and you hold on to that home over time, the likelihood is you're going to build equity. And equity is something we'll talk a little bit later in the presentation about, but equity is critically important. And just think about it. If I'm able to buy a home today, in 5 years, 10 years, 25 years from now, have the capabilities of selling that home and being able not only to get my money back that I used to purchase this home, as well as the interest I paid on the mortgage during my time of owning that home, getting all of that money back and then some, that is a true investment, right? And there's some individuals who think the stock market is the best place for investment. I will tell you, I was told many years ago, I've been in this business for 30 years, and I think one of the first things that I was told and learned is that the stock market goes up, the stock market goes down. We see it all the time. What we see in real estate is typically a nice, steady gain over time in value. And so if you're looking for an investment that gives you that opportunity to gain equity and earn that over time, real estate and a home is certainly that. So an investment is very important. Number 2 on our list. Number 3, there's tax benefits. So many of you, when you look at paying your taxes at the end of the year, we're always looking for ways to reduce our federal income tax, right? So one of the ways that you can do that is to take advantage of when you own a home, you get the opportunity to deduct interest, mortgage interest. You get to deduct property taxes that you pay on those on that piece of land, as well as some other items that you can actually take to reduce your federal tax liability. And in many cases, depending upon your income level and other situations within your personal financial situation, you may help actually get a bigger refund from a standpoint of being able to take advantage of some of these deductions. We go to the next slide. Number 4, stability. This is a pretty cool one if you ask me. When you think about a family, I think of my own family. There's something to be said about being able to have a stable feeling, right? Stability within your family that gives you peace of mind. And if you're having to move all the time, or you've got a landlord that's maybe difficult to work with, or what things that can come from being in an apartment. Sometimes you find yourself in a situation where you just don't feel stable. You just don't feel like it's your own, right? So when I think of family stability, what I think of is a family that, can really call a home their home, and a piece of land that they can say, I own. And when you think about stabilizing your family over time, making for your children to think about place to come, not only where they grow up, but where they come back home and visit mom and dad, or maybe it's bringing the grandkids back, and you have that home, it's yours, and you've created that stability for your family. It's hard to get that when you don't own a home. So I think you want to really think about stabilizing that family as you think about whether or not home ownership is for you. Buying can be actually cheaper than renting. Now, here's the one thing that's really funny is that, and I've heard many people say this. I've been in this business a long time. Is why in the world am I renting and paying somebody else's mortgage payment? Pretty cool, isn't it? You think about it. Is when you rent and you have a landlord, what you're basically doing in many cases is you are paying their mortgage payment. So why would you want to pay somebody else's mortgage payment, right? Now, there's, obviously there's reasons. You've got, and we'll go through that, budgeting and credit. And there's, if you rent today, there might be many reasons that you have to rent. And there's nothing wrong with having to rent. That's a way of life for many people. So don't get me wrong that it's bad to rent. But what we're talking about today is that if you guys on the call today are really in a position and interested about, do I rent or do I buy a home? And you're starting to make decisions and you're sort of looking at the positives and negatives of owning versus renting. One of the things you should really think about is every time you write that check every single month for that $400, $600, $800 rent payment, Likelihood is that's going directly to somebody else's mortgage. So if you're in a position to be able to buy a home, think about paying your own mortgage instead of paying somebody else's. We go on to number 6, contributing to good credit standing. Now, folks, you're going to hear this a little bit later from some of my colleagues. Good credit standing is critically important. And here's the neat thing about it is if you get a mortgage, you make your payments on time, consistently, it allows you to create good credit standing, right? And it also builds equity in your home. We'll talk a little bit about that in just a minute. But good credit standing is critical, right? Critical. And one of the ways to really build your credit score up and maintain that high credit score is by having a mortgage payment and consistently paying it on time. So let's move to the next slide. Number 7, become a homeowner and be free. I sort of like this one because what this is saying really is if you own your own home, you can do pretty much whatever you want with that home. You can paint the kids' rooms whatever color you would like. You can change the carpet. You can change the blinds. You can do with it as you want. When you rent, obviously many of those things are really limited because you're going to have to ask your landlord, is it okay if I paint the room? Or what if I don't like the carpet that's in the home? Why would I put new carpet in? Because it's not mine. So being a homeowner and being free to be able to do the things that you want to do that personalizes the home, that makes it you. There's something about a home that gives a personality that just comes from the person that lives in it, just shines right through from being that homeowner. So have that opportunity to be free and do with it as you like. Number 8, community. This is a cool one. The great thing about when you start to build a home and you start to say, I'm creating stability, I'm creating that ability to sort of have the roots of my land, of my property, of my house. The cool thing about that is you also start to build relationships within the community. That could be at the schools, that could be in a community organization, that could be in a church. Multiple things that you are able to do when you really become stabilized in a community. Get to know your neighbors, get to know your church members, get to know your pastor. Those are things when you're moving around quite often makes it very difficult to do because you don't think you're going to be there long term. Community relationship is very important. Number 9, an emergency fund. We talked about building equity in the home, right? So if you buy a house today for $100,000 and in 4 years that house is now worth $125,000, you've built up what they call equity. And we'll talk a little bit about that later, is equity around value in your home. So if you got yourself into a pinch, let's say your furnace went out. Let's just say that there was an emergency that came up. You might be able to do a loan against your property, a home equity loan, a second mortgage. As you build equity, it gives you that capability of taking advantage of that just in case you do have some type of an emergency that happens. And then finally, on the last slide, number 10, there we go. Greater privacy. And I'll just end with, just really, once again, you think about stabilization, you think about ownership, you think about everything that you are getting with a home. The peace of mind is what I think. When I think privacy, I think peace of mind. And I'll leave you with a thought. And many of you may have seen this. You may have, your family may have owned a home. You may have grown up in a home that your parents owned. But when you think about a peace of mind of owning a piece of real estate, owning a home, it gives you that security. It allows you to have that privacy, and it really sets you on your journey for creating a personality for your family, for yourself, and for your home. So with that, I hope that's a helpful top 10 that you guys can start to think about as we move on. And I'd like to, at this point, pass this on over to 2 of my colleagues. Kate, are you out there? Kate and Kathy, I'll turn it over to you.
Good morning. My name is Kate Carden. I'm with CHN Housing Partners. We are an affordable housing developer in Cleveland, Ohio. And if you could move to the next slide, please. Our agency is a HUD-approved housing counseling agency. We are a NeighborWorks America chartered member, and today we'll be talking about affordability and looking at how you can prepare to purchase your own home. Next slide. Just to tell you a little bit about who CHN is, we are a nonprofit organization that was established in 1981, and our organization believes in the power of a permanent address. So we believe that once you have a stable home, everything else will come. It sets the stage. We work with a lot of local nonprofits, government entities, and financial institutions. And our primary geographic focus is Northeast Ohio or Cuyahoga County, but we're also partnering with other organizations in cities like Detroit, Pittsburgh, and Rochester, New York. Our impact includes 2,500 new homeowners in the region. We provide housing stability services to 40,000 individuals annually, and we've developed 6,500 new homes. And our areas of focus are affordable housing and real estate development, utility assistance, energy conservation and weatherization, counseling and education, as well as lending. Next slide, please. So we at CHN do both group education and we meet with individuals one-on-one. And the first thing that we ask them is, are you ready to purchase? It is one of the biggest decisions you'll ever make. And so we want to make sure that you're ready. So some of the financial questions that we'll ask you as you begin your homeownership journey are, do you have a steady source of income? And have you received income on a regular basis for the past 3 or 4 years? Do you have a good credit history with a good record of paying your bills on time? Will you be able to comfortably pay your bills and your mortgage payment? And what is your debt to income ratio? And do you have money saved for a down payment and closing costs? Can you show where those funds originated? And do you have money left over after you pay those items? Next slide. So the first thing that we will do with folks when they come in for counseling is to create a spending plan. It's really important to know what money comes in and what money goes out. So step one of that is to calculate your annual and your monthly income. We'll calculate that based on frequencies, so weekly, biweekly, semi-monthly, or monthly. And then we'll split the difference between what your gross and your net monthly income is. Gross income is what you earn before taxes, and your net income is the amount that you have to spend. Step two is to track your spending. We'll provide everyone with a tracker for 4 weeks to understand where your money really goes. Some small items like Target trips and Starbucks can add up really quickly without you realizing how much it totals at the end of the month. And then we'll go through those and we'll decide what is a need versus what is a want. And then step three is to create a spending plan that includes your potential homeownership costs. So what mortgage payment, including the principal, interest, taxes, and insurance, are you able to afford? Will your monthly utility bills increase? And do you have a maintenance or emergency savings plan? We included an image from the Consumer Financial Protection Bureau called My Spending Rule. If you want to check that out, it's at consumerfinance.org and can give you a great place to start. Next slide, please. We will take all of our clients through a projection of what they're able to afford. One of our housing counselors created this. We call them the human calculator, but we will use a mortgage calculator to figure out what you can afford over time. Next slide, please. One of our presenters later on will go through credit and how that impacts your ability to purchase a home. But we do strongly encourage folks to work on fixing their credit to get a great credit score, because that could be the difference between obtaining a loan or not, between spending more over time or not, or between qualifying for first-time home buyer programs or not. So including your monthly credit liabilities in your spending plan is really important. Next slide, please. So some easy tips for improving your credit is paying your bills on time. On-time payments have the most impactful on your credit score. Pay down and maintain low balances, ideally less than 30% of your total available credit. And correct errors. There are many reasons to dispute inaccuracies on your credit report. Oftentimes they can lead to positive changes, and oftentimes they are completely free to do. And then pay attention to the length of credit and the variety of your credit on your report. Sometimes it is more damaging to close a credit line than to keep it open. Next slide, please. So thank you very much. Again, my name is Kate Carden. I work at CHN Housing Partners, and my contact information is on the screen should you have any questions after this presentation. Thank you so much, and I will hand it off to our next presenter, Kathy Tucker.
Good afternoon, everyone. I'm really thrilled to be here today with Fifth Third Bank to share with you some information. A little bit about us is we are NODA, and that stands for the Northwest Ohio Homeownership Development Agency. And it's our mission to prepare individuals and families for homeownership. And we are also a HUD-approved housing counseling agency. We have helped hundreds of families over the past few years purchase homes, and I believe it's going to be 25 years next year that we've been standing. So what I get to talk to you about today is my favorite part of the process. You know, a lot of times people come to me and say, Kathy, where do I start? I'm ready to go, but I don't know where to start. So my favorite part of the home buying process that we start to work with is giving individuals their affordability. You might say, Kathy, what is this word affordability that you speak of? So one of the first things and one of the ways to look at this is we want to make sure that you know what you're going into. A lot of times people have no idea if they can afford $1 million home or a $50,000 home. So we're going to go ahead and calculate that for you. And Kate did a really great job of explaining and showing how we do that calculation. But the big question is why is knowing my affordability before going to the bank important? Well, there's three different things that we like to think about. So the first thing is once I figure out how much I can afford, there are some certain things that I might want to know. So how do I prepare? You know, Kate also talked about savings. How do I know how much money that I have to save? So, and then also we talk a little bit with you about what a comfortable payment is for you. When you go to the bank, and they're going to explain this to you a little later in the presentation, they're going to give you an amount you can afford, and that's going to be determinative of what is on your credit report. There may be some other things you have to think about. You know, are you going to have some other family members that live with you that you may have to account for expenses? You know, are there utility bills? Maybe some of those other things. So we're going to help you work through some of that. So when you go get your pre-approval, you can say, oh, they told me I can afford $100,000. But after I calculate everything in, maybe I should stick around 90,000 so that I can still save up some money. And, you know, some other things you're going to have to consider is how are my student loans? That is a really huge popular question. Probably the most popular is like, I mean, I have student loans. So that was my first question is how are they going to factor in my student loans? So going into your transaction with your mortgage lender and knowing this information is really going to set you up for success. And most importantly, the third part of this is how much money do I have to save? Your affordability calculation is critical in this because what we're going to say is, okay, Susie, you can afford a $100,000 home. And she's going to say, well, how much money do I have to save? So then we're going to calculate how much money you have to save. And then that'll help us understand a timeline. You may have that money up front and I may be able to say, Susie, you can go purchase a home now. Or I might say, Susie, it's going to take us about a year for you to save up this money. So then you'll have a little bit of a timeline, and then you can go into your process confident that you have saved up the money necessary. You know, we'll put a plan together for you to say, okay, so, you know, you have your income tax coming. So maybe each paycheck, you can set aside $50, and that will get you to the down payment amount that you need. And then lastly, once you kind of know how much money you have to have up front, then we can start talking about those fun small things that we want to buy. So I promise you, when you go find your dream home, you're going to be looking at it up and down, sizing it up, say, hey, I want to put a privacy fence, right? Or, hey, I want to put in some landscaping. You know, I want to cut down a tree. My husband and I would just cut down a tree in front of our home. So I think it's really important that, you know, you say, I want stainless steel appliances, or I want to rip up that carpet. So knowing your affordability is going to help us calculate a really important part in the process, and that is knowing how much money to bring to your transaction. And it gives you buying power, it gives you confidence, and it really helps you get set up for success. A housing counselor can help you do that on the front end, and then they'll be able to help you set you up with a mortgage lender and a real estate agent so that you go through the process as easy as possible, especially since it's the first time for a lot of people. So we can go to the next slide. Our agency was able to go completely virtual on the onset of COVID-19. And what that has allowed us to do is expand our footprint. So we offer virtual classes, we offer virtual counseling. So anyone within the region is able, even if you don't live in Toledo, to contact our agency. So here is our contact information. They'll show it at the end as well. And I do believe they wanted me to ask if there was any questions before I move on to our next presenter.
Absolutely. We wanted to open it up to questions for anyone that's out there. I know we do have some in the chat. So if our chat master here that's kind of monitoring that, if you could open that up to Kate and Catherine so that they can respond to any questions that we may have out there. Do we have any questions?
Hi, Roy. This is Kayla. I do see a question, and I don't think it is for Kathy, but it was in regards to equity, and I believe we will be covering that shortly. So, but besides that, I don't have any questions in the chat box so far.
Do we have any from Facebook? Any questions coming from that direction?
Yes, there is a question from Facebook Live. And the question was, how does bankruptcy affect getting a loan?
I'll answer the question. So each different financial institution is going to look at bankruptcy different. And I think that they'll explain that a little later in the presentation, but it's okay if you've had a bankruptcy, and all you have to do is meet with, your housing counselor or, your lender if you're working with someone to see what their expectations are. They'll be able to tell you, like, as long as it's been discharged for 2 years, or if it needs to be discharged for 4 years, or if it needs to be discharged for no years, they'll be able to give you that information to help you move through your process confidently.
Some of that question, we may pick that up when we walk through the actual formal process from the banker's standpoint. So so we can give you a little bit more detail from the Fifth Third Bank side, how those issues are generally handled as you sit down with one of our mortgage loan officers. Any other question? Oh, it looks like we got a question out there. Do you see anything, Kayla?
I see them.
Roy, yep, go ahead. I was going to say, I do see it, and it's in regards to a car loan. So how about if you have a car loan with the third bank that already, I had to have no car loan to be able to buy a home. And the credit's about a 623 credit score. So anything we want to address that now?
Yeah, I think we'll address that question. We'll just hold on to that one, Kayla. That's a great question. That we can hold on when Dan and Angela give their presentation from the Fifth Third Bank side as they sit down with clients and walk them through the whole process around how to qualify for a loan. But yeah, we'll just hold on that one. So
there is one more. It says, will I need all 3 credit reports now or wait until counseling session? And I think that's definitely a question for now.
Okay. Kate or Catherine?
Yeah, I can field that one. Every housing counseling or group education class that we go through with individuals, we will provide a credit report, but it is good to check your credit frequently so that you know that if there are any errors on that, you can fix them quickly. I believe some of our presenters later on will provide some places that you can get your credit report for free or for a very low cost to you. But yes, we would pull a credit report for you at the credit counseling session, but it's still great to keep up with your own credit on a quarterly basis if possible.
All right. Well, I'll tell you what. Yeah, if we have any other questions, we'll pick those up on the other side. But I am really excited that everyone out here is really plugged into this. You're really listening closely to what people are saying. You got some great questions, and you are really thinking hard about this. So we'll move on to our next section. Our next section, if you could move up to advance the slides for us, that would be great. Okay, our next section is going to be on credit and credit repair. We want to thank Kate and Catherine for their helpful comments and suggestions and the path forward to this. And so our next section is going to work on this. We're going to have Hope Wilson, and we'll slow down just a little bit here. I'll let the slides catch up with me. We'll come down just a little bit more, and we're going to be there. Keep going. Want to make sure that, okay, so we got Hope Wilson and we got Netta Whitman, who will be sharing on credit and credit repair. They'll walk you through this. I'm sure we're going to have a lot of questions, so we're going to give ample time for you to be able to walk through this. And questions that we don't pose at the end, we'll pick them up at the latter part of our session. So Hope, the stage is all yours.
Good afternoon. I'm Hope Wilson. I'm with Working in Neighborhoods, and we're located in Cincinnati. Next slide, please. Working in Neighborhoods is a nonprofit HUD-approved housing counseling agency. Our service area is all of Southwest Ohio, including Butler, Claremont, Hamilton, and Warren counties. We provide one-on-one housing counseling and group education for home buying, as well as financial literacy workshops. Today, I'm going to talk briefly about credit, which plays an important role in the home buying process. Next slide. Next slide, please. So what is credit? Let's start by defining it. Credit is money you borrow and plan to repay. There's a charge for borrowing money, whether that's interest and fees. Also, credit allows you to make purchases without having to pay the entire price at once. When you borrow money, you agree to repay that creditor and pay the fee for the use of their money. There are several different types of credit: secured versus non-secured, revolving accounts, which are things like credit cards, where the amount you pay and owe can change each month, installment accounts, something that has a starting balance and you pay the same amount each month until it's paid off, like a car, furniture, or student loans. Next slide, please. The 4 C's of credit are one tool used to evaluate your credit worthiness. Capital is the amount of money you have available, your assets and net worth. Capacity is your ability to pay. Do you have more income than you do expenses? Can you afford to repay this loan? Character is your credit history. How have you paid your bills or debts in the past? Were they paid as agreed according to terms? Collateral is the property or assets offered by you to secure the loan. Next slide, please. Next, we need to discuss, when should you use credit? Credit can be useful in an emergency, but keep in mind that using credit is not appropriate in every situation. On the screen are a few questions you should consider before using credit for a purchase of any size. How much do I have to pay to borrow this money? Is this purchase a need or a want? Can it wait till I have cash available? Will the item last longer than the time it takes to pay off the debt? How will the payment affect my monthly spending? Next slide. Although credit can be a useful tool, it can also have some disadvantages. What happens if you overextend yourself and can't repay? The cost of using someone else's money can be very expensive. Be sure you understand the terms of repayment, or you could end up in a bad financial situation. Next slide, please. A credit report is a statement that has information about your credit activity and current credit situation. The report includes your payment history, the types of accounts, the amount of debt you owe, any public record items, things like judgments, liens, bankruptcies, and inquiries. Who's looked at your credit file? Credit reports are used for many different reasons. They're used by lenders, insurance companies, employers, landlords, utility companies. Things remain on your credit report for different amounts of time. Inquiries are on your report for 2 years, public records 7 to 10 years, and old accounts 7 years from last activity. Next slide, please. There are 3 major credit reporting agencies: Equifax, TransUnion, and Experian. These agencies get information from your creditors, typically on a monthly basis, and create a report that includes everything in your credit file. Keep in mind that the information on your credit report may vary from one reporting agency to another. This is because some creditors do not report their information to every reporting agency. You're able to get a free copy of your credit report from each of the credit agencies annually at annualcreditreport.com. Next slide, please. A credit score is a number that creditors use to determine the likelihood that you will repay the money you borrowed. Your credit score is based on information in your credit report. It's made up of the following: your payment history, the amount owed, the length of your credit history, new credit, and types of credit used. FICO, which is the most common scoring model, and has scores that range from 300 to 850. In this case, the higher the better. Next slide, please. Here are a few things you should know about improving your credit. Pay your bills on time, reduce your outstanding debt, keep your balances low in relation to your credit limits, apply for and open new lines only when you need them. Check your credit report for accuracy and clear errors as soon as possible. Avoid too many inquiries into your credit report. That covers my information. I'd like to turn it over to Netta from Homecourt.
Thank you, Hope. I appreciate it. So Homecourt is a nonprofit counseling housing developer in the Central Ohio area. We are also a HUD-approved agency, much like the other folks that you've heard today. We offer first-time homebuyer education classes, financial literacy classes. We do one-on-one counseling like most of the others, as well as foreclosure prevention counseling. So I am Netta Whitman. I am the director of the Housing Advisory Area. So I'm going to talk with you about some ways that you can help to improve your credit score. Kind of what Hope was mentioning, things that you might currently be doing that's hurting your score is if you're currently missing payments. If you currently have bill collectors, creditors are receiving late notices saying that you're missing payments, that is actively hurting your score. If your current credit cards are at or near capacity, if you are attempting to pay off credit cards and you want to close out a card, that may not be the best option. You certainly want to work towards paying those things off, but you also want to keep those things open, maybe without using them as often, because it helps to increase your available credit limit and does not show you at the maximum. So you want to make sure that you're talking with someone professionally before you close those things out. If you are currently shopping around for credit excessively, applying for credit at places that it may not necessarily be required. Inquiries for the purposes of establishing new credit. Anytime that you give someone permission to pull your credit, it does affect your score. Now you are able to pull your credit with for your own purposes once a year without it affecting your score, but you don't want to just go around from place to place trying to obtain new credit. And if a creditor sells your old debt to a new creditor, it could show up on your credit report again, and that would hurt your credit. So that speaks to what Kate was saying, obtaining a copy of your credit report at least once a year to look for errors. Those are the types of things that you want to make sure that you stay on top of. Next slide, please. Actions that improve your score. I think Hope kind of touched on those things. Again, you do want to pay down your credit. You want to not have your cards at more than 30% if that's at all possible. You only want to open new accounts as they are needed, and you want to make sure that the information on your report remains accurate. So next slide, please. Common errors, common credit problems, I'm sorry. Patterns of late payments on your current debts. Again, if you are currently behind or missing payments, you want to try to correct those behaviors before you seek a new mortgage loan. If you have bankruptcies, again, you can still recover from a bankruptcy, but we want to show that you have changed your behavior. If you have judgments or liens, you want to make sure that those things have been addressed before you speak with a loan officer. Past due and collection accounts, again, would show that there have been problems, or if you've had charge-offs, foreclosures. If you have student loan debt, you want to make sure that your loans are reporting that you're current, that you're in a repayment status. Just having your loans in a forbearance, especially hardship forbearance status, is not necessarily helping you. Homecourt has put out what we call an Ask Layton series. You can go to the Homecourt website or go on YouTube and search Ask Layton. We do have a video that addresses student loans so that you can begin to get into a repayment plan with those loans, or just start to seek help. If you're currently behind on your student loans, you don't just simply want to ask for forbearance on them. You want to talk with someone about how you can get those loans current and into an active status. So view our website, take a look at that, but make sure you talk to a professional so that you can get the help that you need to get current. Next slide, please. Correcting errors. We talked about the three major credit bureaus. You want to get a copy of your credit report from all three. They don't necessarily say the exact same thing, which is why you do have three different scores. You want to make sure that they're all reporting all of your information correctly. So any errors that you're trying to correct would need to be sent to each one independently. If you are currently experiencing a problem or have been the victim of maybe identity theft, you want to make sure that you're explaining those problems to each of the credit bureaus. You can put an explanation letter on there if you think that that would be necessary. Send additional information to correct the error. So if the balance is off, it's still reporting that you owe more than you actually do, you want to make sure that you send, say, a copy of your canceled check showing that you have paid these things off. As you're going through your credit and paying off things, you want to make sure that you are requesting a paid in full letter or zero balance letter from each of those creditors and keeping that copy in your records so that you can show that these things have been taken care of. Next slide, please. When we're talking about solving credit problems, the first thing you do, and I think Kate mentioned this, was preparing a realistic spending plan so that you know how much money you have available to put towards this. You don't want to just start contacting all of your creditors at one time. If you don't have the funds to be able to pay all of those creditors at one time, you want to contact one creditor at a time, start to deal with the issues with that particular account before you move on to the next one. But you need to know how much money you have available to be able to do that. When I say to seek professional help, you can go to the HUD.gov/counseling website to seek a HUD certified housing counselor in your area. As you see, each of us are from different parts of the state. So there is a HUD certified counseling agency most likely in your area. If you go to that HUD.gov website, you can put in your zip code. It will refer you to the closest agency to you. When you're paying past due accounts, again, I think it's super important that you're working with someone professionally to help you develop what this action plan needs to be, and then to lay out specifically which ones you want to address first. Negotiating discounted payoffs. Payoffs and settlements are better than no payment at all, but you want to make sure that you have those funds available to be able to address that if an offer were made. It's typically on a time frame, and you don't want to request a payoff if you're not actually ready to do it. Next slide, please. Now I'm going to go ahead and hand it off to Dan Beckley and Angela Preston with Fifth Third.
Good afternoon, everybody. I'm Dan Beckley with Fifth Third Bank, and I am a loan originator. So I'm going to talk a little bit about a mortgage. It's going to take a lot longer to talk about everything that has to do with mortgage than we have today, but hopefully we can give you some basics and get things started so that you can then reach out to the experts that are on this call and assist you in moving forward with the process. If you could go to the next slide, please. So we've talked a lot about affordability today, and that speaks to what you can personally afford with your lifestyle and with your family and your particular debts. The lender doesn't necessarily have their programs built again about you. So it's very important for you to build a budget and understand that the difference between qualification and affordability can be the difference between success and failure in keeping your home. So you want to make sure that you understand what it takes to qualify, but you also want to make sure of what it takes to meet your budgets, to make sure that you're not going into debt even further after you purchase your home, that you have savings, that you're able to pay your savings account every month like a bill when things come up as far as expenses and other things to fix or other things that are unexpected. You want to make sure that that's important. So if you look at the example here, this is talking about debt ratios. So this is talking about the amount of income that you have pre-tax, before any taxes or insurance or anything else comes out of your check, and then 28 to 40% as far as an acceptable total debt payments. There are some programs that go a little bit higher than that, and it really depends on your total picture as far as your qualifications on what flexibility that you're going to have for your debt ratios and things like that. But the main thing that's most important is to decide your affordability and build that budget first. So if you can flip to the next slide. So something that we haven't really addressed too much in specifics is what you're going to need to expect as far as expenses. So there are a lot of different down payment assistance programs, and there's all sorts of different ways to help you with the funds that you're going to need to close on a home. But you want to make sure that you investigate those and have an idea of what you're going to need so you know what to apply for. So you're going to have to pay for the tax escrows and things that are going to be involved in your closing. So they're going to start the escrow account so that when those bills are due later in the process of owning that home, then the bank can pay those for you on time. Then you're going to have to pay your first year's homeowners insurance. There are processing fees and title fees, an application fee, an appraisal fee, earnest money, your inspection fee, which is really important as well. The appraisal and those types of things are just for the bank and for establishing a value. They're not going to tell you all of the detailed information you need to know to build savings plans and build things for things that may be needing to be repaired or replaced in the future. So it's a good idea to make sure that you look at what exactly things are going to cost in the future so that you can plan accordingly for those savings plans. And you can flip to the next screen. So there are a lot of different loan programs that are out there. I recommend that only under specific circumstances that you look at programs with adjustable rates. Most people, especially first-time homebuyers, really need the predictability of a fixed rate mortgage, so that they can budget appropriately. Being a fixed rate mortgage, you are going to see that your payments do remain stable, but your taxes and insurance, if they go up or down, can cause your payment to adjust. So that's something that you have to look into as well. If you're purchasing a home that has a tax abatement or very low taxes, then once you purchase that home and they reevaluate it, it may increase your payment. So that's something that's important to plan for. There's a lot of programs at the FHA loans, VA loans. We have got a Fifth Third community mortgage that has some incredible benefits that can be combined with our down payment assistance. That's going to be discussed a little bit later in the presentation. There is so much more than just an FHA loan as far as a low down payment option. So that's something that you definitely want to speak with a lender so that they can get you pre-qualified and talk about, what programs are available out there. What goals do you need to meet before you're ready to apply for that particular program? Because I say this over and over again to my clients, it's not a matter of if you can buy a home, it's a matter of when you can buy a home. I tell people not now, and I don't tell them no, because if there's a plan, if you figure out what you didn't know that was in your way as an obstacle, then that's something that you can do, to work on that and begin an action plan. I'm going to pass this over to Angela. She's going to talk a little bit about pre-qualification process and things like that.
Great. Thank you so much, Dan. My name is Angie Preston. I am a mortgage loan originator in the Central Ohio area and in Southern Ohio and Fayette County. So what things do we need to expect from our lender? Nope, I'm sorry, that was yours, Dan. So a few things that we need to do, that you'll need to do to prepare, is first thing is definitely get your finances in order. I was mentioned before, pay your bills on time. This is one of the biggest things that you can do to make sure you qualify for, a mortgage loan or any loan for that matter, because the credit bureau and the lender wants to see how you pay your bills and that you pay them, of course, on time. You'll want to thoroughly go through your credit report. You want to make sure that everything on there is correct. Things are reporting correctly, such as student loans, personal loans, credit cards. You don't want any collections or any errors on your report. Make sure that your social security number and date of birth and address, you just want to inspect it for accuracy, just to make sure that everything looks good. I know some people that are maybe juniors and seniors, sometimes their credit report gets mixed up. Please make sure that, you didn't pull, your social security number, but your parents' information. So that is another thing that we do see sometimes, is credit reports getting mixed up. Save for a down payment. Every time you get that paycheck, pay yourself. Put some in that savings account. Always gather your tax returns. So lenders will want to see the last 2 years. So if you're applying for a loan, in 2020, they'll want to see 2018 and 2019. They'll just want to see federal. You don't have to worry about Ohio taxes. You don't have to worry about your county, your state. Just gather your federal taxes and any W-2s or 1099s. Collect bank statements. So always make sure that you have your bank statements ready to go, whether it's electronically or print them out. One tip is make sure all pages are there. So if you have, 8 pages and 3 of them are blank, they all have to be there. So that's one very important tip to always remember. So lender would have to see if it says page 5 of 8, but it's blank, don't leave it out. Make sure that you have all of it, because that's what underwriters are going to look for. Another thing they don't tell you a lot is to watch overdrafts. Underwriters will take a look at your bank account and see if you have excessive overdrafts, and they will, those usually are not reported to the credit bureau until, possibly it would go into collections. But one thing underwriters do look at is overdrafts. So make sure you watch those, and they'll want you to write, a letter of explanation. Why are you overdrawing? Because that is a good indicator of, can you pay your bills on time, and will you be able to make your mortgage payment? The last thing to do is take a homebuyer education course. There are several that are offered in the Central Ohio area. There's Freddie Mac and Fannie Mae offer them online. Some of our first-time homebuyer programs, our conventional ones, specifically require homebuyer education programs. These are online and they're free. So Freddie Mac and Fannie Mae do offer them, but ask Homecourt and your other partners. They always have some education courses available too. And next slide, please. I love this tool that we have. How much can you afford? I like to give these, to, of course, my first time home buyers and, my younger clients who are just getting started, to see how much can they afford, because they know maybe I don't want to spend more than $500 a month. But then when they put pencil to paper, they see that they do have some extra residual income, that they maybe could bump their payments up by $100 if that got them more of a house. So use a tool like this. We have a great one, as you see on the slide, but I'm sure there are other lenders or other spreadsheets that you can use, to calculate how much you can afford. So the first thing you want to do is calculate your monthly gross income. So this is before taxes, to see how much you bring home on a monthly basis. Calculate your outstanding debt. So this is minimum monthly payment on your credit card, car payments, student loans, any other loans you have, child support, alimony. This doesn't include, you can include your utilities here. So just maybe an estimated figure on how much you spend on utilities. And then calculate your projected mortgage payment. So keep in mind, you will have your payment, you will have property taxes, you will have homeowners insurance, possibly PMI, which is private mortgage insurance, and some folks might have HOA or homeowners association fees. So all of that would need to be factored into your payment. And then after factoring those, that comes up with a ratio. So kind of the rule of thumb is debt ratio should not exceed 40. We're usually 43%. Housing ratio shouldn't exceed 28%. So this is just a great little tool. It doesn't have to be something that you use, to the penny, but it is a nice tool to see what you're comfortable with and how much you can afford. Next slide, please. So we are ready to get you pre-qualified. So this is the exciting step, guys. So this is the time where you will call your mortgage loan originator and you will get pre-qualified. So what we need to gather is just stated information, such as your address, where you work, how much you make, if you rent or own, if you pay alimony or child support, then we pull your credit and we see what you can qualify for. Then we give you your letter and set you up with a realtor, or you can go out searching for yourself or find your own agent. And this is when you go and look at homes. So I stress, after I give you that pre-qualification letter, start gathering your documents. We talked about getting W-2s together, your federal taxes for the last 2 years, but there are other things that you're going to need to get. You usually don't have to give them to the loan officer right away, but always have them handy. So if you sign a purchase contract, you're ready to go. Because once you sign that purchase contract, usually you have 30 days to finish, from start to finish. So us as loan officers have a lot to do for you in that 30 days. Your appraisal, underwriting, everything. So have your W-2s ready, have your driver's license ready. So this is for you and any co-applicant. Make sure your employment information is written down for your loan officer. So employer name, address, phone number, your position, your start date, and your wages. Last 2 years W-2s and taxes. 2 most recent pay stubs is what we ask for. 2 most recent bank statements. And I always stress all pages, even if they are blank. So those are just some things that you'll want to gather, after you get that pre-qualification letter. I think that concludes our Mortgage 101. Does anyone have any questions for Dan and myself?
Thank you so much.
Angela, I think there may be some questions. Maria, you want to try to fill the and see if we've got some things out there, okay?
Thank you so much, Royce, and thank you so much, Angela and Dan. The question that came earlier is, what is equity? Todd spoke about it. Could either of you talk to us about equity?
Sure, I can talk about equity. So equity can be gained in two different ways. One, paying down the loan that's against your home, and also the second way would be the home increasing in value. Typically, over time, if you look at the statistics from history, you'll see that the home prices will go up. They'll be up and down, but they'll in general go in an upward direction. So that's going to grow the equity that you have in your home, and as well as every payment that you make towards the principal will reduce the balance. And so it is the difference between what you owe on your home and what is the home currently worth on the market.
Thanks, Dan. Also, earlier, the question around bankruptcy, how does bankruptcy affect getting a loan? And one of our wonderful CRA lenders answered it, and she said, also, in addition to Kathy's response, is that you'll need 2 years discharged for your FHA loan process, and 4 years if you're going with a conventional loan. So that's information we didn't want to pass by. Do we have any questions from Facebook Live?
Yes, we do have a question. The question is, how often should one expect to meet with their lender before the process is completed and they can start working on closing on their home?
Well, you would meet with them probably for the first time to get pre-qualified. So during that meeting, what I talk to you about is I bring out that calculator, that we just discussed of how much you can afford. We discuss your credit. We talk about how much you want to spend. We talk about your down payment, if you have a down payment saved, or if maybe you don't quite have the funds yet, maybe you're not ready to get pre-qualified. So we kind of touch a little bit on credit, to see where you are, just to get an idea of what your goals are. Do you want to look for $100,000 house? Do you want to save for a down payment? So that could be, you could come see me the day that you want to get pre-qualified, or you could just come see and talk to see what your goals are and how much you do want to spend. If you're not quite there credit wise or savings wise, banks have the resources to set you up with a personal banker, so we can get you on a budget and a savings plan. We can also do that too, but they can set up special accounts for you that can help you save money, and they have special products that can help. So it can be, right away. It can, sometimes I have clients that that we're still working on things 2-3 years later. Maybe they're self-employed and they're not counting a lot of income right now. So we talk to them on what to do. Hey, maybe you have to claim some more income and not write some more things off. So your self-employment income looks, more, so you can qualify. So there are people that I've been working with for 2-3 years. There are also people that come in and I've never met them before, and we're done in 30 to 40 days. So it's definitely not a one size fits all, and it just depends on your needs. We will stick with you and work with you as long as it takes.
Thank you, Angela.
I'd like to chime in. On that really as well. As I tell all of my customers that I work with, that it's a journey, and you might not necessarily be ready right that moment. But if you work with a lender like us or like the homeownership counselors as well, you can build that process. Fifth Third also has a lot of virtual options right now. We have really recently added some online options where you can fill out your own application online and get that sent over to us in a secure way through our mortgage portal. And then we can do virtual chats, whether you talk to you over the phone and pull up that information to discuss your credit report with you. So it takes a varying amount of time depending on where you are in the journey, but also there's a ton of different options on how to get us your information and work with us too. It's flexible on that as well.
Thanks, Dan. I also just want to remind you that there are 3 people and 3 organizations who can help you along the way. That's been the housing counselor that we introduce you to, your lender, which we introduce you to, and your realtor, who we'll talk to a little later. But without any further ado, I want to bring Greg Elmore, who's the Vice President and Area Sales Manager in Dayton, Ohio. Take it away, Greg.
Thank you, Maria, and good afternoon, everyone. So again, my name is Greg Elmore, and I'm the area manager for the mortgage loan officers in Dayton, Ohio, and the surrounding area. So I get the fun part, is what I call it, because this is talking about free money. So who likes free money? Anybody? Royce is raising his hand. Maria? Okay. So I get to talk about a wonderful program that Fifth Third has for down payment assistance. So if I could have the next slide, please. All right. So if we can go to the next one. Okay. So down payment assistance, Fifth Third has a unique program that will give you up to $7,500 for the down payment on your home. And I always get asked, what's the catch? And I wouldn't really call it a catch. There's really just two ways to qualify for this particular program. One is we go to the FFEIC website and we take a look at your property address just to kind of see if that maybe property address qualifies it. And I think in some cases, you'll be pretty surprised if we could go to the next screen. There is a lot of areas that fall into the low census tract that are really kind of changing areas, we'll call it, in the community, and allows us to give you that down payment grant. So there is no, I guess, call it catch, other than we do report that as income to you, but there's not a recapture clause or anything else. We're just basically giving you $5,000 to $7,500 for your down payment. And this can be used for down payment as well as in some programs for closing costs. Another way to qualify is the median income. This particular example that we have on the screen, and this is a government website, by the way, shows what the median income is for this particular county. In our case, if you're at 49.9% of that income, you would automatically qualify for our down payment assistance. So it truly is a great way that Fifth Third is offering to help you in your home buying journey. Something else that's really tremendous about this program is that it can work a lot with other programs that are out there. We've had a lot of community partners on the phone with us recently, and a lot of them have programs that can be used in combination with this. The best way, of course, to find out maybe what programs are in your local area that you're looking to purchase in would be to talk to your local mortgage loan originator in your area. I think we're going to be providing some lists later of who those folks are. But some of our partners have programs, like the City of Toledo has a Home at Last program. I'm out of the Dayton area, and I know our Homeownership counseling here in Dayton has a program that's available in Montgomery County. Central Ohio has an ADDI program that's available. So these can be used to combine to cover closing costs, to cover down payment, and just really assisting you in buying a home. So I think that's great. And Fifth Third is provided, again, you with a wonderful program here to make that happen. We can flip it to the next slide, please. All right. So Royce, I don't know if we have any questions that we need to address here first, or Maria.
I don't see any questions out there in the chat right now. But obviously, when you're talking about free money, we're going to get a lot of people who are interested in that piece, and the connection with our mortgage loan officers, which we shared that information. We're also going to reshare that at the latter part here, where you'll be able to sit down and have discussions with them about the programs that are available in your market. Is going to be helpful information. So So right now, do you see anything, Maria? Anything in the chat?
I do not, Royce. I do not see anything.
Okay, great. How about you, Walter? Anything in the chat on Facebook? I tell you what, we'll just move to our next presenter, Veronica. You now are on stage.
Thank you, Royce. now is, I think the person before Greg said that it was an exciting time when you get your pre-approval letter. And it is an exciting time because now you can go shopping with a real estate professional. Next slide, please. So finding your home. Next slide, please. My name is Veronica Bedell Nevels, and I am broker owner of Priority Plus Realty in Dayton. We say our motto is real estate is our world and you are our focus. I am the president of the Ohio Realtist Association and the past president of the Greater Dayton Realtist Association. I have 18 years experience in this industry, and our company is a full service real estate company. Next slide, please. Your communication is the key to your success. Your realtor works for you. And so time is of the essence when you start shopping for a home. The methods of communication are very important. What happens is the real estate professional needs to know how to communicate with you, how to best communicate with you. We have all these options: the telephone, email, texting, Facebook Messenger, Instagram, WhatsApp. The person who is representing you needs to know how best to communicate with you. And then you need to, because when you're looking for a home, you're not always with your agent. And if you see something, your agent needs to understand that you might send them a text with an address and they can respond to you right away. You might send them a message on Messenger. They need to check their Messenger quite often so that they can communicate with you in a quicker fashion. So it's really important. Communication is the key these days. Next slide, please. When you're meeting with your real estate agent, you need to bring your wish list. Your wish list includes the features and benefits that you're looking for a home. It includes the area, your city of preference, and what you're looking for. And also, even though you're approved for a certain amount of money, you need to let your agent know what you want your monthly payment to be. That's really important because you might be approved for $200,000, but you don't want to spend more than $800 a month. So the agent needs to be able to understand what your end goal is here so that they can look for homes that will yield you that the $900 limit that you want instead of maybe spending $1,200. A lot goes into that, but the realtor needs to know that. We have what's called a consumer guide to agency relationship, which is something that your real estate professional, the state of Ohio requires you to sign. That just talks about how the real estate professional works with you, and it is required by the state. So it is not a contract that you're signing to say that you're working exclusively with that particular agent, although we do have a contract that you can sign for that. Next slide, please. So when we start looking, when you are free to look at homes, it's important for us to know what your work schedule is and when you are free to look at homes. Right now, our market is very, very hot everywhere throughout the state of Ohio. So when you see something on the market, it might be gone in 3 hours. You know, things are moving pretty quickly and there's always multiple offers. So it's really important that we know when you are available to look at homes. Now you are searching for homes on the MLS, the multiple listing service, on Zillow, on Realtor.com. if you're riding by a home that interests you, you want to call your agent or text your agent. We talked about how to communicate. You want to communicate with them right away. And once we start looking at homes, you want to take notes and prioritize each home. With a market as hot as it is right now, you need to really know specifically what you want in a home, because these homes, a lot of homes don't last more than a day. Next slide, please. So when we find a home and you really think this is the one, we're going to write the offer. And inside the offer are a lot of documents. I'm not going to go over every document, but there are a lot of documents. And one thing that's important is the amount of earnest money that you're going to put down. And earnest money is good faith money that is presented. It's on the contract, and it is presented to show that you are serious about purchasing this home. You do get your earnest money back at closing once the contract has been satisfied. The kind of loan you are getting is in the offer also. If you're doing an FHA loan, if you're doing a conventional loan or VA loan, whatever type, it's listed there in the contract. And it's important for your realtor to know what kind of loan you're getting. And if you need any seller concessions, it's important to know what you need to ask the seller to help contribute towards your closing costs. Then also on the contract, the amenities that stay in the home, that needs to be on the contract. If you see drapes or something, now the dishwasher, the refrigerator, the stove, that normally stays in the home. If there's something else, we need to put that in the contract also. Your home inspection period is something that you will do also, is have a home inspector come in and take a look at the property. There's a seller repair period. So if we find something wrong, a leaky sink, a refrigerator that doesn't work or something, we need to put this information in what's called a post-inspection agreement, and your realtor will go over that with you. A home warranty, title insurance, the closing date, the occupancy date is very important, and how the deed is written. If you're married, if you want a survivorship deed, all of that is important, and it's all part of the offer process and the process of closing on a home. Next slide, please. So the documents accompanying the offer, your realtor will provide these documents, and they include a residential property disclosure, which the seller is citing everything that they know about the property, the lead-based paint disclosure, which is required by the state, the agency disclosure, which says, it tells the world that I'm representing you as the buyer, and Linda Sue is representing the seller. Then also your pre-approval letter has to be there also. It's a very competitive industry right now, and you have to have all your ducks in a row. And your pre-approval letter is vital when you're making an offer, as well as a copy of your earnest money check or money order. Next slide, please. And the final process, the home inspection is done, the whole house inspection is done. There's individual inspections that you can have done. The appraisal has to be done. The house has to meet the appraisal. The title work process has to be done. And the lender is asking for documents throughout this process simultaneously. The next slide, please. So finally, you have what's called a clear to close. And that means that now you're ready to close. We schedule the closing. The buyer and seller meet at a roundtable closing. And sometimes we don't do that, but a lot of times we do roundtable closings. The title agent or attorney is the closer, the buyer is signing the lender documents, and the seller is signing the lender documents, which includes the deed. You get the return of your earnest money, you get your keys, your garage door openers, and congratulations, you're closed, you're a homeowner. Next slide, please. So for a trusted real estate professional in your area, you can call me. My number is here. You can text me. And as president of the Ohio Realtist Association, I will be happy to refer you to any real estate professional, to the president of our chapters. And we're in 7 different cities in Ohio, and I will be happy to refer you to a president who will refer you to the proper person, real estate professional who can help you. So thank you for your time and attention, and I can answer any questions.
Well, if we have some questions, we could probably start answering those in our question answer area. So I'm going to suggest that we go to the next slide. Okay, thank you, Veronica. And listen, my name is Pat Ramsey. I sit here in Cleveland. I am the Community Economic Development Manager for Northern Ohio. And we have a lot of questions that I see that are popping up both in our chat and in our Facebook. First of all, I just want to thank our dream team, our housing counselors, our mortgage lenders, our realtors. And I know that we have some realtors that are out there on the phone too, or out there streaming with us that are listening and are probably ready to help out with people as well as our lenders. So Maria, I know that you are monitoring the questions, and Walter, you too from Facebook. Maria, why don't we get quickly to your questions that we have in our chat.
Thank you, Pat. I am going to go to, I want to buy a home in 30 days. Is it possible if I have my escrow money been in the program of homeownership for 5 years? So I'm not clear. Mary Lee, you've asked a couple questions. I just want to make sure that I have the right wording for your question. So you may want to come back in and do it. There's another question that I'm seeking. I'm seeking foreclosure homes for a second income, and I am a homeowner and I own my own home, from Donetta.
Okay, so it sounds like we have a question probably for our realtors as well as for our mortgage loan officers. Who would like to answer it? Veronica?
If you're seeking foreclosure homes, we are available to show you foreclosure homes. You are a homeowner, and that's generally not a problem. If, depending on how you're paying, if you're paying cash, it's generally not a problem. It also depends on if it's a HUD home. There are some restrictions and requirements, some time period of delays before an investor is allowed to bid on some properties. But typically that might not be a problem, but the lenders need to talk with you, especially if you're not going to pay cash. If you're looking for a loan to buy foreclosed properties, you will have to have a pre-approval, even if you already own a home, and because you already own a home.
Thanks, Veronica.
I can speak to the lending. I was going to say, I could speak to the lending side a little bit on this as well. Buying a home from a lender, which is what a foreclosure is, you're usually going to find that the homes are listed as is. So it depends on the quality of the home or the condition of the home on whether it's going to be able to be financed or not. When you're purchasing a home from an individual, sometimes they'll work with you and fix necessary items in order to meet the minimum appraisal requirements. But a lot of times if it's lender owned or owned by a business or something of that nature, they're not as willing to work with you on those pieces. So that can be something that holds you up. It's not always. I've helped lots of people purchase foreclosed homes for their primary residence and for investments, but that's just something to think about when you're viewing the home with your real estate agent, so that they can help you point out some things that might slow down the lending process before you spend money on an appraisal and on an inspection and things like that.
Thanks, Dan. Another question that came in, Pat, is what's the difference between pre-qualification and pre-approval?
Okay. I can speak to that too. Pre-qualification is something that you're going to do with your lender that has a very flexible process to it. And that's why a lot of lenders prefer that. And there's a lot less documentation involved. A pre-approval is something that you're going to hand in all of your documents. So your pay stubs, your W-2s, all the things that Angela had spoke about earlier in the presentation. It's going to be sent down to an underwriter, and it's fairly permanent. So if you request a pre-approval for a certain amount of dollars, it's going to be sent down with that scenario, approved and sent back. Whereas with a pre-qualification, with our process at Fifth Third Bank, we have the flexibility to change that scenario for you depending on properties that you're looking at. We can input taxes and insurance estimates for one property versus another property, which is really important because different areas that you may be searching for homes may have different insurance and tax costs, so that your payment might be very different in one area versus another. And that's important because if you're shopping in a certain price range, for instance, $100,000, if the taxes are very high, it may have a higher payment than something you might find in an area, a different area that's $110,000 to $115,000. That house may have a lower payment just because of all the different pieces of that housing payment. So pre-qualifications, if done correctly and done with a lender who knows what they're doing, and then they're going to be just as solid for a real estate agent to take to the table.
That's a great answer. Thank you so much. Hey, Maria, before we go to the next question on Facebook, there is one person that asked about, is it best to pull credit and start paying debt now or when the financial plan is set up? So I probably want to get one of my counselors in to answer that question.
So I can answer that question. They can pull their credit themselves at annualcreditreport.com and take a look at what's out there. And if they have savings and money available, can pay down their debts. If they need help in figuring out what to pay first and how to tackle it, if they have a lot of debt that they need to work on, they can meet with a housing counselor and we can pull the credit and take a look at it and create a plan. So it really depends on where they are in the process, but they should reach out to a housing counselor and we can help guide them.
And I would like to piggyback off of what Hope said as well. I always recommend going to see, a housing counselor first, because if you're trying to get pre-approved for a mortgage and we're taking a look at your credit report, we can prioritize things based on what the bank's expectations are. So, a bank may require that you are allowed to have over $5,000 worth of collections, which I don't know that this is the case here, but your debt to, you may have a lot of debt. So a housing counselor can take a look at that and help you start prioritizing, because we've had instances where someone has gone off and spent all of their money paying off medical bills, for example, and then they come back and medical bills was not considered when they went to get the pre-approval. So a housing counselor can really help prioritize those debts based on you going and getting a pre-approval.
Oh, thank you so much. That's great information. Walter, do we have some from Facebook, please?
Yes, we do. The first question is basically a two-part question. How has COVID-19 affected the landscape when it comes to purchasing a house as far as credit is concerned? The second part of that question is, I was off work for 6 months. I was furloughed. I did get some incremental income, but will that make me have to wait longer to go through the mortgage process?
Okay, that sounds like a quick two-part question. Veronica, maybe quickly, and then after that, perhaps we'll either have a loan officer or a counselor to sort of respond on that.
I will not respond on the mortgage aspect of it, but as far as viewing homes and buying homes, purchasing homes, we are busy going into these houses with our mask and our gloves, and the homes are moving quickly, as I said before. And I'm not sure that COVID has anything to do with that. We have low inventory. So there's more buyers out there than there are houses. So that's why things are moving pretty quickly, but we are still out there servicing people on a daily basis, listing homes and selling homes.
Okay, thank you, Veronica, very much. Okay, what about the 6 months? Can somebody help me answer the question about somebody being off or still getting some monies from being furloughed?
I can speak to that. So we have gotten a lot of updated guidelines from Freddie Mac and Fannie Mae and FHA and VA, all the organizations that write the guidelines for the banks. And there's been different programs that have different pieces to that. So it really depends your specific situation and your specific loan program and your specific lender. However, for a lot of the programs, what I've been experiencing is if you are back to work and you can have your employer verify that you were off for a COVID-related layoff or furlough and you are back to full time, then you can use that income as if you're an hourly base, or salary employee. You can go back to using that income to qualify. However, if you are an employee who is self-employed, or I'm not an employee if you're self-employed, a person who is self-employed, or an employee who receives overtime that we're trying to use to qualify, or per item income, or bonuses, or commissions, things like that, those are going to be averaged over the whole time period and of year to date. So that is going to reduce what you can qualify for based on those instances. But you really need to speak to your lender, specifically about your situation, so they can tell you exactly how it's gonna affect you.
Okay, thank you so much, Dan. We have one last question, and then we're going to try to answer some of these questions over time in a response back to you through emails and what have you, or you can contact us. But we do have one more question. How do I get a down payment assistance loan or a down payment assistance? And that would be Greg.
That would be me.
That would be you.
Yeah, so it's kind of back to talk to your local loan officer, because there's so many different programs out there. Obviously, the Fifth Third main one, to qualify, you go to the FFEIC website, look at maybe a property you're considering, and then the county income for that particular county. But because we also partner with all of our partners, a lot of them on this phone, for other down payment programs, I just think it's best to talk to your local lender, and then they can reach out or tell you what might be available. A great thing about Fifth Third as well is we have a search tool where if we can put in your particular criteria, or maybe where you're buying, and we can actually search and see what other types of programs may be out there that maybe can combine with our down payment assistance. So I would say the first step is really just kind of talking to your local lender in the area that you'd like to buy in.
Okay, great. All right. Well, I think that we're going to move on from the questions and answers. We had a lot of great questions. We still got some more, but we had a lot of great answers from our team, our dream team. So thank you very much. Can we go to the next slide, please? Okay, community homeownership contacts. Okay, these are all of our counselors and our real estate agent and leader for the Ohio State Realtors Association that spoke to you today. And what I'm going to suggest you do, if you have your camera, and even though we'll make the slides available to you, but if you want to snap a picture with your cell phone camera, please do this now. I do it all the time. And these are folks that you can contact later on and just make sure that we know how to get hold of them. Okay, next slide, please. All right, and this is our Fifth Third homeownership contacts. These are folks like myself that we work in our various areas throughout Ohio, that we can help you get to our mortgage lending officers to make sure that you can also get some more help. Again, snap pictures if you want to be in touch with us. Can we go to the next slide, please? All right, this slide to me is the most important. These are our mortgage loan originators all over Ohio. So you may have to snap the picture a couple of times for this, but here you got our Columbus, our Toledo, our Cincinnati, Dayton area. And all I can say is that we can help you make sure that you get to the next level and working with all the people that you talked to or heard from on the phone, on the phone. I want to say on the phone, but on the screen today. All right, our next slide, please. We are giving out $25 gift cards, and we do have 4 winners, and I'm going to announce the winners right now. And keep in mind, we do have your telephone numbers for the most part, or your emails, and we will get back to you to make sure that you can send us your addresses so that we can send you your gift cards. So the people that we have as winners are Malaysia Daniels, Jatala Henry, and if I'm saying your names wrong, please forgive me, Deborah Bonner, and also Philip Barnes. So all I can say is those are our winners, and thank you so much for participating with us. Yay!
Congratulations!
Whistle. I should have bought my whistle for winners today. Okay, so those are our winners. All right, and then we have another slide here. Next steps. Okay, so next steps, I want to say thank you for joining us, and you will be hearing from us. There will be 2 emails coming to you in the next month or so. There will be one coming to you in about the next week, just to let you know that we're thanking you for participating with us today and to provide additional information. Let you know about our MLOs, and also over the next 30 days, you'll get some more information from us as well too. We just want to thank you. And Royce, I want to turn this back over to you, Mr. Royce Sutton.
Pat, thank you so much for really sharing that great information. And again, congratulations to those winners that we had on the drawing. I know you're excited. Everyone could always use a little bit of ray of sunshine. We've provided you that with good information today. We provided you great professionals. Every single piece that was shared with you today, we've got great people who know what they're talking about. And we'd like to also thank our partners who are part of this. Everyone from the Cincinnati Herald, the Dayton Defender, Working in Neighborhoods, CHN Housing Partners, NODA, the YMCA, Homecourt, Priority Plus, NAREB, the Dayton Weekly, the AKAs, and the Kappas. And the list goes on. But these are partners who shared with you today. The information your journey does not end here. Please reach out. We're just excited about you starting this journey with us today. And though we're closing out, know that you can reach out to anyone who was on this call today. That will allow you to advance your journey toward home ownership. Again, I thank you for your time, presenters. Thank you for all the great information. The Fifth Third Bank team, congratulations! You did a great job. Really handled it well. And Walter, back in the background, you did a great job for us. Everyone have a great Saturday.